Baba my Abba. So Alibaba is up 33% in the last 1 month and up 50% from 5 weeks ago, where it found a momentary bottom at $58 per ADR on the 24th of October. Let's not forget that Alibaba is still down 70% from its all-time highs. So let's not get too cocky. But hey, at least we are making some progress. So for those of you who quote-unquote caught the bottom, congrats. In fact, there are a list of Chinese ADRs that has a market cap of more than $1 billion that are at least up 100% from their 52 weeks low. And the bigger names include TAL Education, New Oriental, Pinduoduo, Beike, Didi, etc. These aren't the discoveries of your YouTubers who are Chinese experts, by the way. Instead, they will tell you how crazy the Chinese protests are and how the government has lost its way. So I believe many of you are smart enough to make your own judgment and your own assessment in the investing realm. I won't belabor the point. Instead, I will try to provide a brief account of whatever that have transpired in the last 5 weeks, and all I ask for is to help gently hit that like button in case you have forgotten up until now. It's crazy. Weeble just extended their latest sign-up reward and it has never been better. So you can get up to $150 cash voucher if you fund and trade your Weeble account today. So all you have to do is to sign up for a new account with the link below and deposit at least 2,000 Singapore dollars and execute one buy trade for a stock or ETF and one option. And that's a whooping 10.5% ROI on your initial capital. So for those of you who have been sitting on the sidelines for some time now, I think this is the sign to get yourself motivated. So Weeble prides itself on zero commission trading. So let's stop paying commissions and use them to buy more Alibaba. So if you need another reason to sign up for Weeble today, they are also giving out attractive referral rewards if you get your friends to sign up using your own referral code. But of course, you should do so with mine first. Wink wink. Don't let this 10.5% ROI slip away so easily. Link will be in the description. Thank you Weeble for sponsoring this video. So I still remember vividly that fateful day, October 24th, 2022. It was the Monday when CCP concluded their 20th National Congress during the weekends prior, and where Chairman Xi essentially consolidated his power and reign over China. So the news cycle on that Monday was so intense and so crazy. Long story short, they're basically saying that China is finished. They're going back to their communist roots, socialist agenda, and Mao-like governance. So from what I recalled that day, the A-shares market was actually not faring too badly. I think the major indexes were down only 2 to 3%. It was the Hong Kong market that basically got annihilated. Hang Seng was down 7% and Chinese tech stocks were down at least 10% across the board. At least 10%. So it was really one of those moments where I truly started questioning myself. What did I got so wrong? And I was down more than 50% at one point in time on that one single position after averaging down for close to 2 years now. So I think many of you probably cannot comprehend the level of self-doubt, frustration, dumbfoundedness that set upon me on that fateful day. So despite all the aforementioned feelings, I told myself that none of this makes sense anymore. I took out my last bullet and shot at the market. Essentially, I bite the bullet, if you get it. So if Alibaba actually continued tanking by another 30% to maybe under $40 a share, I'm gonna actually need to start an OnlyFans soon. Jokes aside, I didn't manage to catch the bottom, but I did buy Alibaba on the Hong Kong exchange at around 62 Hong Kong dollars and Tencent at around 216. It's not financial advice and I don't recommend you doing what I did, but deep down, I know this fiesta has to come to an end and China is not going to evaporate, contrary to popular belief. Funds around the world has a mandate to diversify, but everything right now in the market is just on fire sale. So nobody wants anything related to China. So I guess I'll be the foolish one running into the fire. In retrospect, it was a fleeting moment where everyone was consumed by the whole China is going to collapse narrative and how the political system is going to fail the country. Ironically, developments during the past weekend goes to show that the check and balance mechanism is well and alive in China, but I'll elaborate more later. Subsequently, the market actually traded sideways for the next 3 weeks after the Party Congress, as they are probably trying to assess and trying to evaluate how bad this government would be to businesses, and there were probably a technical recovery because it was so damn oversold. Then, on the 3rd week of November, the two dragon heads of Chinese tech reported their earnings, namely Alibaba and Tencent, and I own both of them. So they weren't spectacular results. In fact, in a normal environment, it would be bad earnings because they showed little to even no growth or even negative growth. But the minimum they could do was to ensure a certain level of cost discipline, which many US big tech have came to realize and are currently adjusting in real time, while China was already front-running it for some time now. So on top of all these being said, the valuations of these Chinese big tech today was obscenely low, and many of their models are probably expecting companies like Tencent or Alibaba or your other big techs to shrink by 10 or 20% or something. But since they managed to hold their revenues and margins on a relatively huge base, the markets were giving them credit for that. So on top of these developments, there were greater clarity in the past 5 weeks around the two main concerns surrounding China today: zero COVID and the property crisis. So local banks provided a lot more guidance and clarity on how they intend to support property developers. Furthermore, China has also recently announced new rules to essentially facilitate listed property developers' equity financing to resume refinancing, essentially a relaxation of these policies, and it was reflected by the monster rally many of these developers see in the equities market. On the second concern on pandemic controls, China was already hinting about opening up, so they released the 20-point plan on the 11th of November to essentially update their national policy towards the pandemic. That said, it was still rather confusing from an outsider's perspective because we still see many Chinese officials stating that they will stick to COVID-0 regardless of the outcome. But as the saying goes, actions do speak louder than words. The entire pandemic situation was also catalyzed by the fire incident that happened in Xinjiang that caused the mayhem of a riot just this weekend. So I'm not going to explain further. I have already made a dedicated video on that. So if you haven't catch it, you can do so after this video. So I just want to make a side remark here. When I see video thumbnails and titles like these on my recommended video section, especially on YouTube, because we know it's a Western platform, I know that we are close to a bottom at least. And of course, let's not forget that the Fed's relatively dovish stance last night has triggered the entire market to rally alongside. So that's that. So we will see if this is a lasting moment or just fleeting in nature. So to conclude this video, I just want to employ a Chinese saying, 船到桥头自然直. In English, it means that things will all fall into place at the end of the day. So if you're not an optimist, don't invest in the stock market, because the underlying assumption of putting your capital into the stock market, which is a hell of a beast in itself, is that you are hopeful of the future. With that, I'll see you in the next video, but more importantly, I will see you on the moon. Goodbye!